In today's video, I want to make a full breakdown of the situation that we currently have for USD CAD. Now, starting here from the monthly, what we can see is that the market has been creating a series of higher lows, and at the same time, it was creating equal highs. However, the market now created this monthly candle here that just closed above the previous resistance, which is now turned support. So what we have is all this level, which is previous monthly resistance, now turns support that we could expect the market to potentially test and then to reject to the upside. Dropping down on the weekly time frame, what do we see? From a weekly perspective, we can see that we did have the creation of this W formation. And in general, after the creation of a W, what you want to see is for the market to create a rejection to the downside to go and complete the pattern at the previous resistance turn support. So here on the weekly, we did expect this rejection to the downside. And in fact, I made a full breakdown of USD-CAD when the market was around this area, explaining all the reasons for which we did expect a bearish week. And by the way, I will link in description this previous analysis so you can go and check it out for more free education. However, now that the market has completed the pattern, it is currently testing the neckline of the W formation, which by definition is previous weekly resistance, which is now turned support. And we could expect the market to reject to the upside this previous resistance turn support. Dropping down the daily time frame, what do we see? Now, from a daily perspective, we can notice how the market has now printed an M pattern. So it is actually testing the weekly support and demand with an M pattern, which is a bullish pattern, after which you would expect a rejection to the upside and completion of the pattern at the neckline is basically an inverted W. Now, if we go and see what we have when it comes to the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, and we check the data specifically for the CAD, what we can see is that with the last reports, net positions on the CAD went from 26K to 17.9K, with 4.7K shorts added with the last report and 1.5K longs getting closed, which makes the CAD weaker, meaning that USD CAD could definitely get potentially stronger for the completion of the M pattern at the neckline. So how we could be approaching this potential short-term longing opportunity. Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, what we could be doing, potentially also with students, is monitoring price action from an intraday perspective during this move to the downside, waiting for the market to shift from an intraday bearish market as we would have to an intraday bullish market. And if the market would shift from an intraday bearish to a bullish market and provide to us one of our valid entries, at that point we could be looking for a potential rejection to the upside and for the market to complete the M pattern at the neckline. Now, if you enjoyed this free analysis, education, and update, make sure that you drop a like and a comment. It really does support the creation of more free analysis, education, and updates for all of you, and I will see you in my next breakdown.